Hi, I'm Doug Knoll, and in this video, I want to talk about why a Regal Assets Gold IRA is the best investment in a stock market crash. And at the end of this video, get my free 10-part training on how to invest in gold and get your free Precious Metals Investor Kit from Regal Assets. First, I'm an investor, not an advisor. My opinions are my own, and Financial Freedom is my professional review YouTube channel. I may receive compensation from the companies whose products I review and recommend. Financial Freedom is independently owned by me, and the opinions expressed here are my own. Although I do my best to be objective, my recommendations may not be neutral or independent. Of course, be sure to investigate, ask questions, and seek professional advice on any investment decision you are contemplating. In a moment, I'm going to share some of the recent news items about the economy that might give you something to think about. But first, why is a Regal Assets self-directed gold IRA the best investment in a stock market crash? Well, what happened in 2008 and 2009? At the beginning of the crash, gold fell 29.5% in 7 months as traders liquidated their gold holdings to get into cash because they needed liquidity. But look what happened after that. From September of 2008 up until September of 2011, less than 3 years, gold increased in value by 166%. And during that same time period, the stock market absolutely crashed. As a general proposition, gold price rises as paper assets fall, and gold prices drop as paper assets rise. So investing in gold is defensive and intended to preserve some of your portfolio value. So why invest in a Regal Assets self-directed gold IRA? Well, Regal Assets has a sterling reputation. Regal Assets holds an A+ rating with the Better Business Bureau and a AAA rating with the Business Consumer Alliance, with less than 3 complaints and over 233 plus 5 out of 5-star client reviews with TrustLink. So there's very, very high customer satisfaction. And Regal Assets makes the potentially complex process of creating and investing in a self-directed gold IRA very simple and easy. Earlier, I said I'd share some of the recent news items about the economy that might give you something to think about. Look at these quotes. The U.S. economy officially entered into a recession in February, according to the National Bureau of Economic Research, ending the record 128th month expansion that began in June of 2009. Here's a headline from Barron's in June of 2020. The Dow is tumbling. It's time to talk about stock market bubbles. Despite already rock-bottom interest rates, banks are tightening lending standards across the board, shrinking the availability of credit. More than 40 million people lost their jobs in the last few months in the fastest and steepest economic slowdown ever recorded. More than half of all households with low incomes in the United States have experienced a loss of earnings, as have a quarter of all adults. The numbers are grim. But as bad as things look today, they're on track to get much, much worse. This was late May 2020. Most importantly and counterintuitively, household income sharply increased in April as hundreds of billions of dollars in lost wages were replaced by trillions in government spending. The government sent out more than 159 million stimulus payments of up to $1,200 per adult, more if you have kids, and more than 20 million unemployed people became eligible for an extra $600 a week in federal unemployment benefits. The result, according to Bloomberg, was the largest monthly increase in household income ever recorded. But the massive interventions that made all of this possible will soon come to an end, but the unemployment won't. The IMF, the International Monetary Fund, is set to slash economic forecasts and warns of a crisis unlike the world has ever seen. June 2020. June 2020, New York, Reuters. Chesapeake Energy Corporation is preparing to file for bankruptcy as soon as this week, said 3 people familiar with the matter, becoming the largest oil and gas producer to unravel after an energy market rout caused by the coronavirus outbreak. One must wonder why the stock market is rising against this backdrop of economic chaos. And here's why, and it's dangerous. The Federal Reserve is buying junk bonds and corporate debt exchange-traded funds, ETFs, as part of its campaign to revive the American economy. Next on its shopping list, U.S. stocks, as Scott Minerd, Global Chief Investment Officer at Guggenheim Partners, told CNN Business. Well, if this was useful and informative, click on the link below to sign up for my free 10-part training on how to invest in gold and get your free gold investor kit from Regal Assets. Be sure to click on the link below.